Welcome to Explain the Charts. I am your analyst for this Monday, March 16th, 2026. Ethereum is currently at a massive crossroads, caught between extreme institutional interest and warnings of systemic failure. The current price is hovering around $2,200 as we see a significant rebound from recent lows. Today we are going to look at the daily, hourly, and 15-minute data to make sense of this chaos. Before we look at the candles, we must address the massive news flow hitting the wires this morning. First, we have reports that Ethereum whales are aggressively adding to their positions despite a year-to-date decline of over 45% earlier in the year. Companies like BitMine Immersion Technologies have just acquired another 60,000 ETH, signaling strong corporate conviction. However, Culper Research has countered this optimism by claiming Ethereum is in a death spiral due to impaired economics following recent upgrades. Adding to the bearish sentiment, Vitalik Buterin and the Ethereum Foundation have been spotted selling holdings to fund operations and research. Specifically, the foundation sold 5,000 ETH in an over-the-counter deal for $10 million just recently. On the institutional side, BlackRock has successfully debuted its staked Ethereum ETF on Nasdaq, which is already seeing significant volume. We also see JP Morgan Chase greenlighting Ether as loan collateral, which is a major step toward legacy finance integration. Geopolitical tensions between the US and Iran have also caused sudden risk-off sentiment, leading to sharp liquidations in the crypto space. The market is currently wrestling with an adoption paradox where network activity is high, but the price has lagged until very recently. Analysts are divided, with some calling for a drop to $1,500 while others target a long-term rally above $10,000. Looking at the daily chart for 2025 and 2026, we can see the incredible ride Ethereum has been on. Throughout mid-2025, ETH saw a massive rally that peaked well above $4,800 in August. However, that peak led into a sustained correction that eventually saw price bottoming out near $1,500 by October of last year. The recovery from that bottom was slow, eventually hitting a local high near $3,600 in November before another leg down. In February 2026, we saw extreme volatility, especially on February 5th, where the price dropped over 15% in a single day. This crash corresponds with the geopolitical fears and the short reports we discussed earlier. Price found support around the $1,800 level, which has become a clear line in the sand for bulls. We can see a series of higher lows forming since that February bottom, which is a traditionally bullish signal. The daily candle on March 4th showed a strong 7% gain, breaking the immediate bearish momentum. We are now testing a critical resistance zone that has capped the price for several weeks. Dropping down to the 1-hour chart, the internal structure of the recent recovery becomes much clearer. On March 13th, we saw an explosive move where Ethereum jumped from 2080 to over 2100 in a single hour. This move likely wiped out a significant amount of overhead short liquidity. Since that breakout, the price has been consolidating and using the 2100 level as new support. The derivatives volume on Binance is currently 6 times higher than spot volume, suggesting this move is being driven by hedging and futures positioning. Notice the steady climb over the last 48 hours with very little pullback. This indicates that buyers are stepping in to absorb any minor selling pressure immediately. The 1-hour trend remains firmly bullish as long as we stay above the 2050 level. We see a slightly ascending channel forming here, which often precedes a move toward the $2,300 target. However, we must be cautious of the rising wedge pattern that some analysts have identified on this time frame. Now, looking at the 15-minute chart for today and yesterday, we can see the granularity of the current price action. There was a brief dip toward 2060 earlier on March 14th, which was quickly bought up. The price then pushed toward 2100 and spent most of the day grinding higher. On March 15th, we saw a sudden surge late in the day, pushing the price from 2130 to nearly 2200. This intraday momentum is very strong and suggests that the whale accumulation we discussed in the news is manifesting in real-time orders. The volume bars at the bottom show significant spikes during the upward moves, confirming high conviction from buyers. We are currently seeing some resistance near 2200, which was a historical pivot point. If the 15-minute candles can close and hold above 2200, we could see a quick run to 2300. The VWP is currently trending upward, and price is staying consistently above it. This indicates that the average buyer today is in profit, which reduces the immediate desire to sell. Returning to the daily view to summarize our outlook for the rest of March. The major support levels to watch are 1850 and the psychological $2,000 mark. On the resistance side, 2300 is the immediate target, followed by a much stronger wall at 2500. I believe there is a 60% likelihood that we test 2300 within the next week. This prediction is reinforced by the heavy whale accumulation and the successful launch of the BlackRock ETF. However, if the foundation continues large OTC sales, or if geopolitical tensions escalate, we could easily see a retest of 1800. Short-term traders should look for entries on pullbacks to the $2,100 area. Long-term investors are likely looking at the current zone as an accumulation phase before the next major upgrade cycles like Glamsterdam. Watch for any news regarding the SEC or shifts in the derivatives funding rates, as these will be key triggers. If funding rates become excessively positive, be prepared for a potential flush out of long positions. For now, the technicals on the lower timeframes are favoring the bulls, but the daily chart requires a breakout past 2300 for confirmation. Stay disciplined with your stop losses and don't get distracted by the noise of the death spiral reports. Focus on the actual volume and the price levels we have identified today. We will continue to track these developments and provide updates as the market evolves. The next few days will be crucial for determining if this is a new bull market or just a relief rally. Make sure to keep an eye on Bitcoin's performance as well, as it remains the primary driver of market sentiment. If Bitcoin clears 74,000, Ethereum will likely follow it with even more volatility. Thank you for watching Explain the Charts and being part of our community. Please remember that this is not financial advice, and you should always do your own research before making investment decisions. Trade safe and stay informed.